Okay, 3, 2, 1, let's jam.
What is up, guys? G here. Welcome back to another video. Today I want to go over a few different stocks that I'm going to be watching this week. We have a huge earnings week. We got Google, Facebook, Microsoft, Apple, you name it. We have a crazy week ahead. So there's a very good opportunity to make some money, but you can also definitely lose money. So definitely trade carefully. Obviously, all the plays that I'm going to cover in today's video are my personal opinions. So you guys need to really do your own research before following anybody else. So for today's video, I'm going to go over 3 stocks. We're going to look at the technical analysis and share my ideas on how I'm going to be playing each stock. We're also going to take a look at the options flow from unusual whales to give us a better idea and give us more conviction in our play. If you guys are interested in signing up for the unusual whales, I will put a link in the description. It will give you a small discount when you decide to upgrade to a paid subscription, but I do highly recommend them. It has really changed my trading strategy for the better. And while you're down there, take a second and hit the like button, subscribe to the channel if you guys want more videos like this. And with all that being said, let's go ahead and get started with today's video. So the first company that I'm going to be watching this week is actually going to be Twitter. Obviously, this one has a lot of hype going for it right now, and it's crazy because even though the market's been selling off, this thing has been holding itself. It's up almost 4% on Friday, just kind of moving sideways after hours. But the insane thing is also volume. So average volume is about 45 million, and we're almost doing double the volume. So we'll go and take a look at the chart in just a second, but I do want to share one thing with you guys. I want to shift over to Twitter real quick because there was some news coming out that Twitter is re-examining Elon's bid for Twitter. So that is very bullish for the company in general. So I do expect maybe a small gap up, maybe up to 49, but we'll just have to wait to see how futures open today. Obviously, this thing is on its own track, so I do definitely think there's going to be a lot of momentum going into Monday, probably even leading into its earnings on Thursday. So I want to shift over to the chart now and give you guys my take on the technical analysis part of Twitter. So this is going to be on the daily time frame. And so the first thing you'll note is we did have the potential of maybe filling this gap right here. But if you take a look, we actually did get rejected here. So that is actually very bullish for the stock in general. So it does look like we're trying to get back up above $50. Just clearing some of that out. You can also kind of maybe gauge that it does look like a potential double bottom here, where it tried to come down and break and fill the gap, got rejected, came back up and tried to do it again. Yet again got rejected. So just further telling us that it doesn't want to fill this gap at this time. If you take a look at the OBV, you can see that if we do end up breaking through $50, what it looks like, things could get pretty crazy again. So I am expecting our end target to be back around $54, because also that is where Elon is trying to get the company for. So I'll definitely watch the OBV on the daily. Things could get really crazy if we end up breaking through it, come back, retest it, and then breaking higher to retouch the high of the OBV here. Shifting over to the 15-minute chart, you can see it's a very similar story. We are making higher highs now. So we had a high here, making a new high there, and then one as well here. The main thing for us, I think, is holding $18.50. This is actually a very strong resistance. You see we've came up once, maybe twice, 3 times and try to break through it. And obviously we're now bouncing that off as a support, and hopefully we can break out. Clearing that out, and I want to highlight one thing here. You can actually see this is somewhat of a cup and handle. You can see this is a perfect cup, and it's now building that handle. So if we can actually break out of this descending resistance, things could actually get pretty crazy as volume starts to kick in. And then just to wrap things up on the chart, you can also see similar story here from the OBV. This has been a very strong resistance for the most part. If you take a look, we've been rejected like multiple times here, but now we are trying to confirm that as a support, and this move could be very massive if we actually support this and hold it. We'd probably come back up to these levels. So that's going to about wrap up the technical analysis for Twitter. Obviously, I'm very bullish on the chart. There's also a lot of positive sentiment with the Elon story and other followers, so a lot of bullishness here. You can easily see that even with the volume. As you can see, there was a lot of huge volume spike that first day that got announced, and then slowly it started to die. But if you see, now we are kind of curling back up as far as volume goes, so I do expect a continuation into going into this week. But obviously that also is going to bring a lot of volatility, so just make sure to manage your risk in case there's a wrench that gets thrown and something doesn't work out. And also we do have earnings, so definitely be careful with everything going on. So now I want to shift over to the unusual whales platform and make sure that there is also bullish sentiment on the contract side. So I'm not going to spend too much time on the unusual whales platform. You can definitely check this out on your free time. But basically apply the 200k premium here. So we're going to see all the orders above 200k come in. And just right off the bat, you can see Friday was actually very bullish for Twitter in general. Lots of bullish orders coming in. Everything above 300k here, 200k, very small bearish orders. And then even leading into Friday, you can see a lot of bullish orders were coming in. And you can actually just ignore the cross orders. These are kind of just fake noise. So definitely take a look into learning some about that. Just going to expand some of these orders just to give you guys an idea of a lot of the interest that's going on for the $50 call strikes. One thing that I would just be careful is there's a lot of volume on these days, but there hasn't been a lot of open interest that increases. So on Thursday we had about 6,000 in volume, but a lot of that volume didn't carry over. So this will be something that I'm going to look into going into Monday and see if a lot of this volume sticked. And I would expect about 36,000 open interest by Monday, and that would just verify that a lot of these contracts that are being traded are being open and held. But just stepping back and looking at the overall flow, everything does look bullish. A lot of these $50 call strikes that people are opening are actually call debit spreads. Well, at least in my opinion, it looks like they're buying the $50 calls and then selling the $60 calls. So that is actually a bullish spread. So that's just my take there. The only other thing I want to show you guys on this here is going to be the highest open interest increase. You can just see that there's tons of open interest for these 29s, for April 29, the 47s, the 45s. Huge open interest. You can see there was about 200% increase. For the previous day had about 2,500 open contracts, and then by the end of Thursday, I believe it's going to have about 7.5 open contracts. And then just shifting over to the flow levels really quick here, I'm just going to give you guys an overview of the entire breakdown. So the minimum 30k premiums, everything here is going to show you guys there is a lot of bullish sentiment going into 429s, and then going into early May, mid-May, everything will start to get bearish, but I think that's just going to be a generic sell in May, go away type of vibe. So I think some of the technicals and some of the options flow is definitely aligning. So that's another reason that I'm very bullish, especially with all the catalysts coming from Elon. But you guys let me know your thoughts in the comments below. And actually, one last thing to note, definitely be careful with contracts going into earnings, because Twitter does have a huge IV crush. I think it's estimated around 30%. So there's going to be a lot of value lost in your premiums. So definitely be careful with the plays that you take going into it. So just a reminder there. All right, guys, my next stock that I'm going to be watching this week is going to be more of a sleeper. I don't know if many people will be playing this one, but I think it's very interesting. It's going to be United Parcel Services, the UPS, man. So this one is trading around 187. It's kind of slightly down for the day, but I think there is a great opportunity here, especially with a lot of the fuel costs going up. This can definitely affect their guidance, as well as the Russia situation can definitely affect them. I think the last time I looked, the UPS actually did stop doing services in Russia, Ukraine, and Belarus. So that is definitely going to affect their guidance as well. So this one's going to be one that I actually play to the downside, but based off of the options flow, this one can take a little bit longer to play out. And then this one also does have a high IV crush, so I would definitely take a look at doing credit spreads, longer dated contracts, or some other different option strategy. All right, guys, now let's shift over to the chart to give you guys an idea, at least my technical point on UPS, the UPS, man. And you can see we're basically in an uptrend here, kind of going upwards, but we did break this nice ascending support. So we are technically in a bearish territory. And you can actually also see that we are kind of consolidating at this level, but the OBV is actually already breaking down. So we'll take a look at that in a little bit, but things can actually get pretty crazy. If we break 180, we'd be looking to come back down to about 165, 170, somewhere around this range. And this was an area where it did trade for a while and actually kind of build a nice support level. So before we actually go to the OBV, I just want to point this out again. We are consolidating at this level here, which looks like a bear flag if it looks like that. But on the OBV, things are actually already breaking down, which can actually be a lead indicator that things could come down in the short-term, mid-term time frame. But now I want to pivot over to the OBV and give you guys a better idea of why I am also bearish. So this actually does look like a technical head and shoulders pattern. If you kind of zoom this out further out, we got the shoulder here, we got the head here, and then we got the second shoulder here. And obviously it looks like we did break this. So now the OBV is showing us a bearish sentiment going into earnings. The only other thing that I would say is we do have a nice support at this level. So right here, which could be an area of support, so it could bounce up and retest this neckline before actually breaking down. So that also kind of gives me an idea that that's why things could take a little bit time for this to actually break down. And one good method to take a look at the time frame for this is going to be taking a look at the options flow. So let's hop on over to that. All right, so moving over to the unusual whales. Obviously I've already applied UPS, the 200k premium, and these are all the orders that came in. And right off the bat, you can see a lot of bearish momentum coming in. So the ones that I've highlighted are the 406, which is probably like 2 weeks ago, and then this is actually before the breakdown, so they were kind of already leading into that. Now these don't expire till mid-May, so it could be a possibility that they hold these contracts going into earnings, or they possibly sell them just because of the IV crush. UPS does have a pretty high IV crush, so there's a few different ways to definitely play this. In my opinion, I would probably do the credit spreads, take advantage of that IV crush, and then after the IV crush, go ahead and get puts going into May. So initially that is what I'm looking at, but I'm definitely going to take a further look into the options flow on Monday to see how many of these contracts actually held up. But from a generic point, you can see there's still a lot of open interest in the bearish side for the UPS contracts. Now let me correct myself, they're actually not even getting a lot of the puts, they're actually just selling a lot of the call premium. So they're selling the 210s. You can actually see that on a few different orders, the 210 calls for mid-May. So they're just selling a lot of calls and collecting a lot of premium. And this is actually pretty smart because, like I said, UPS does have a huge IV crush, so a lot of these call contracts are going to lose a lot of value after earnings. The only other thing to note here is obviously the bear premium is really high, so 75% of the premium that's coming in is bearish. So that can be a mixture of selling calls and buying puts, but overall the bearishness is definitely there. You can see about 75% of the overall flow is bearish. So before we move on to the next one, I'm just going to wrap up by taking a look at the overall breakdown for the options flow for UPS. You can take a look at the minimum premium for 30k. So I think the way I'm going to play this one is definitely wait till post earnings and then definitely see how that reacts and actually start getting my position. But if you take a look at the breakdown, you can see the bearish premium, it's about 87%, but most of that is not going to come till mid-May. So May 27th is where it has a huge spike of bearish premium. So that's going to kind of correlate to the 190 strike price. Again, this one kind of lines up with the technical analysis. We have a potential head and shoulders breakdown. As you saw from the leading indicator OBV, it is showing us a downward volume pressure, so that is something that I'll be watching. And then all that kind of correlates to the premium that we are seeing in the contract strikes as well. The third play that I'm interested in playing is going to be Microsoft. This one's also going to be reporting this week. I'm looking to play this one on the downside. It's down about 2.5% on Friday, but I do see maybe possibly more downside. We'll take a look at the technical analysis, but there's also some social media stuff going on with this one. Bill Gates is actually shorting Tesla, so it would be funny if the shorter starts shorting this person that is shorting Tesla. Man, that was so hard to say, but it would be funny if the person that is shorting Tesla is now getting shorted. But one of the reasons I want to play this one is because, again, I think Russia is going to definitely affect the revenue, and this one hasn't really pulled back as much as some of the other stocks like Facebook, Netflix. These have already got destroyed, and I feel like this one is maybe lagging the downside. So I do expect maybe like 260, maybe 250. But I guess one of the things that's really holding this one up could be their dividend payout, so 0.91%. But let's take a look at the chart and I'll show you guys why I am bearish on this one. So there's going to be Microsoft on the daily here, and obviously the first things I've already highlighted for you are going to be this head and shoulders pattern. This is a very bearish pattern. Once we break this neckline here, things could get pretty bad. We could possibly break down, retouch the 275, and then eventually break down. Usually that is what happens with some head and shoulder patterns. The other possible thing that I was looking at here, it was a potential descending triangle where we had the descending resistance and the nice support. So maybe another retouch of that $300 level, so right about here, and then eventually breaking down. So that is another possibility, but just kind of based off of the OBV, and we'll kind of expand that out. So if you zoom out to the OBV, you can see we had a nice resistance here. This is probably back in June last year, but this one's actually always been a hard resistance, and so when it does break out, it always wants to come back into this range. But it does look like if we break this range down here, this lower support, things could get bad for it, and we'd probably come down all the way down to this level. So I do expect about 260, possibly even 250 if we actually do break underneath this. And so just coming back out to the chart and giving you guys my overall thoughts, I am a little bit more bearish on this one because this one hasn't really lost most of its gains. If you see it from the all-time highs, that's about 18-20% compared to like the SPY, AMD, some of the other high growth stocks. Facebook, they've lost tons of value, but Microsoft has held really good. So I think this one is lagging and does expect a nice pullback down to about 250, 260, and I think that earnings might be the catalyst that we need there. Hopping over to the Unusual Wealth platform, quick breakdown. I've already got the 200k filters applied here, and you can see most of the bearish towards the end of the day is going to be bearish, so that is a very significant indicator. Overall, the call premium is pretty much break even, so about 53% is bearish, 47% is bullish. But a lot of these orders that are coming in towards the second half of the day is actually indicating to me that there could possibly be more downside. And so obviously you can kind of filter and go through some of the smaller premium, but this is going to be the larger orders here, and for the most part Friday was very bearish, as well as that kind of did reflect the market in general, but this one hasn't really come down as much as the other ones, so I do think that there is some downside here. The one order that I do want to show you guys for Friday is actually going to be this one. This is the 429 262 puts that came in. This one actually came in multiple times where the volume was greater than the open interest, and actually one of my other filters caught this one, but I'm just going to modify the premium here to give you guys an idea of where it came in. If you scroll all the way down here, you can actually see 429. This order came in multiple times in this all bearish side here. Of course, you can see 300k order, 98, 200k. This all came in at the same time, so it's a pretty huge order if you take a look at it, just adding all the premium here. But But just adding all that volume for today, you can see the previous open interest is about 2,000, and then this day, or at least on Friday, about 8,000, almost 9,000 contracts got traded. So I'm definitely going to be taking a look at this one. If a lot of this volume stuck for Monday, then this is going to be a very leading indicator going into earnings. Shifting over to the intratrade analysis, just a quick breakdown of some of the highest open interest. You can see obviously the 267 puts actually got the most attention as well, going from 222 open interest to 3,000 contracts being traded, or at least open. So we'll take a look at that on Monday as well, see how many of these contracts actually got held overnight. Most of these other contracts are actually expired, and then this is for later time frame as well. And you can see similar across here. This is by percentage. You can see the 267s, the 252s for next week. These are going to be pretty huge, and not much open interest increase going into this week for the call side. The last thing I just want to show you guys is going to be those flow levels for Microsoft, and this is probably one of my favorite features on the Unusual Whales platform. We're going to look at the 30k minimum premium here. Obviously the breakdown for the bearish and bullish is going to be 58 to about 41%, where a lot of the strikes are going to be for 50, 60, and about 75. And you can see the highest peak for the bearishness is going to come in June, mid-June. So kind of leading into May and then going into June, I do expect some more downside from Microsoft. And so that's kind of just backing up some more thesis that head and shoulders pattern can actually be a breakdown. So that's going to about wrap up today's video, guys. Let me know your thoughts in the comments below. Which plays are you going to be taking this week? We have huge companies reporting, so these are not the only plays that are out there. Obviously Facebook, Google, Apple, Ford, and so many others are going to be reporting. So I would love to hear your thoughts on what companies you're going to be watching this week. I think this is going to be a very pivotal week for the overall market, since we do have a lot of the giants reporting this week. Well, guys, I hope you guys found value in today's video. Take a second to smash the like button for me. Check out the Unusual Whales platform. I think you guys will find great value from it. And with all that said, you guys have a great day. I will see you guys in the next video. And as always, keep moving forward.